What's going on, guys? Happy Saturday. So, crazy last couple of days in the stock market. Obviously, we know that Russia invaded the Ukraine, so we are still dealing with that geopolitical news. We did get a little bit of a bounce in the overall market for 2 days, but one thing I do want to keep everyone informed on is on the triple Qs, we are still below macro supply. So even in the worst bear markets or sell cycle markets, you are going to have accelerated bounces. So you're going to have significant green days followed by significant red days. That's just the way that the market cycle works. However, not saying that, we're going to go down and make new lows. But if, let's say, for example, this is going to be the short-term bottom here, stock that we're going to be looking at is Nvda. Current low price, we did drop all the way down into that 206 the day of the invasion overnight sessions here. And then we had that immediate reversal, one of the strongest reversals in the triple Qs. I think it's only been 3 or 4 times where we've actually been down 2-3% and actually recovered that and closed green on the session. So you can see all of these green bars here. That's what we kind of had, and then we kind of just consolidated in the after hour session. And then Friday we kind of just pretty much are just bear flagging up here at around $242. So I'm going to give a couple of levels that we need to look at. I'm not going to tell anyone that it's time to start loading the boat because this is the bottom. We're going higher, but you kind of want to play it day by day. If you want to start nibbling in, I'm going to give you some areas that you really need to focus on. So obviously the level that we're going to need to really focus on is this 206 level. Anything below 206 is going to start another leg down and could be a spell for a bigger correction or a bigger bear market cycle. Now, just for next week's purposes, today is the 26th of February. So as we let this kind of weekend play out, depending on what kind of news that we hear from the Russia-Ukraine situation that we have going on, here is a potential play for scalpers or day traders. What we're looking at here is $242.50, and we're going to look for a profit take right around this 245.95, 245.96. 1 hour time frame, that's going to correlate with the 200-day moving average. But even more significant, why I want to point that level out is you can see here the daily chart 20 period moving average is correlating with 256. So even though we had significant selling and a significant bounce reclaiming the 200-day moving average, we are coming into the mean here. So what that means is this 20 period moving average is a mean reversion area. So if we are going to get a little bit more of some continued bounce, perhaps maybe this is the short-term double bottom that we actually tested 2 times here, and now we're going to get ready to start kind of ramping up. Not saying that we're going to come all the way back to all-time highs, but we could start making a little attempt if we do reclaim that 246 into the 262 area. That's going to be the next area of significance that we're going to really need to pay attention to. You can see here highs of 269. We would really need to break over 269 for Nvidia to start getting a lot stronger, start getting a lot more bullish, for more people to start coming into this to the stock. What I do think is happening right now, though, is markets do not like uncertainty. So even though there is a war going on, yes, there is geopolitical problems going on in the world, that is providing some answers for the overall market. And anytime the market gets answers, they can kind of sort of digest that uncertainty, digest that news, and we can start making little waves higher. So just from a short-term perspective, if you're really going to want to start holding this stock, maybe potential swing trade, I would let it close over this 245, 246 area and then get that daily confirmation close over that. And then you have potential here from around 246 into 262 would be a nice little trade. Just make sure to lock in some profits there at 262. Anything to the downside, we're looking for a loss of $231, and I can actually show you on the hourly time frame why that level is significant as well. So if Nvidia loses 237, it's going to come right down here to the 50-day moving average on the 1 hour time frame, which is $231. If Nvidia does start cracking below $231, for me, being an options day trader, this is going to be the area that I'm going to be looking to take a short position for just a day trade, just a scalp, because we are going to have significant room down into the back to the 220s, and anything below 220s can definitely come down here and test this 206. I would not like to see it do that. I'd like to see us continue to consolidate here, and I would like to see us make this run up towards 245. For me personally, I'm not too sure if I'm going to take this day trade from 242.50 into the 245. There's not a lot of room to work with there. So anytime we're kind of breaking out of consolidation, but we have overhead supply just right above. It makes things a little bit more trickier just due to the fact that stocks can stop, you know, at the blink of an eye here. So, with 2-3 points worth of upside into this 200-day moving average, I can see us chopping around into this area. And if the overall market does want to reject this area, because you can see here, we've been trading underneath the hourly 200, for quite some time now, 1, 2, 3, 4, 5, going on 6 trading days. So just about a week and a half's time now. If we do get rejected on this area, this would be a potential area where sellers or short sellers would come in and start buying put options and or shorting the stock back down to the mean, which is 237. So, pretty significant little play here. You have 10 points worth of room to the downside if we reject. If you are more of a perma bull, you are more of a long biased player, what you want to do is you want to get that close over 246. So if we can get a daily close over 246, what you would be looking for then would be the following day to kind of consolidate and then start taking out that 246. I believe if we take out 246, we do have room higher here to push into this 260 area. That's going to be the next area really that I want to focus on. But just due to the fact that we have been rejected each and every single time we get to this 200, which is going to correlate with the 20 SMA on the daily chart, we have been rejected. So if you are looking to play the range and maybe you don't believe that, the market is going to rally and come out of this, then you would be looking for that rejection at the 200 on the hourly or the 20 SMA on the daily. And you would be looking to take your short position there for the potential ride back down into support. Just make sure you're covering your position as you're getting into support, as the market is very volatile and any one news headline can sway us one way or the other. Guys, I hope this video helps you. If you guys want to trade with me each and every single day live, where I'm kind of going over these levels intraday, giving you areas of opportunities where we can take potential trades, join my Discord community, join the chat. I've got great traders in there. That link can be found down in the description box below. Also, do me a favor, smash that like button and subscribe to the channel. And I'm going to see you guys all on the next trading video.